Good afternoon, everyone, and welcome to the daily roundup with ForexAnalytix. Sorry about that. I didn't even realize the time just went past, and we already hit the time to go and start the webinar. I was just looking over a couple of things. We have seen the euro dollar, just to go and give you an idea. Let's go on and just recap for those that may have not been with us in European trading. We did see the euro come under pressure with, let's pull this back, with European PMIs that were certainly less than stellar, especially when you look at the German PMIs. Really, some of the worst levels that we've seen since the financial crisis, and that really put the euro under some kind of pressure, and we quickly traded from the 1020s and started dipping and just continued to go lower. We came into, we had a support level here that we're looking at. Actually, and we'd even mention it here as we come in to here, right here, as this is the analysis that we do on, at least I do, before the week even starts. So it says euro's been capped by 1075 in the downtrend line for the prior week. The pair has defended 110 level, which may be more about a $5 billion option strike expiring on Thursday than true buying. A break below 965 can drive the market to take out 109 even. We can see the 965, and that was actually, bear with me. That was actually today's bias chart support. I was mentioning that in the chat room that, hey, look at this 965. It actually comes at 965.9, so it's like 966. But we did go in and find, and I think that Amanda had like a 78% coming in at that same time. So we saw some decent buying, but you can see here as we came up to the 110, the market has rotate a bit lower. We also have seen the cable dip in. There's a potential, I guess, for this to go a little bit lower, but we've got our bias chart support coming in here, which comes in at, I think that might have been from the prior week right here on the daily, but you can see here on the bias chart, our bias chart support is 24.24. I think we bottomed out today one of the teens, maybe 24.13. I think Amanda's looking for a break below 24, but we're holding here for right now. So much of this pair is about politics or the issue with Brexit, so you always have to be careful. And what I meant to say is the headline risk per se. Dollar CAD's, let's go and take a quick look at dollar CAD. We're mired here right now in this 50 pip trading range here, and if we look at it actually on the 2-hour chart, it stands out a little bit more significant. You can see here we had our bias chart support this morning from the European session at 32.56, and with the upside now 33.07 has been capping this, but we put here that the resistance is going to be 33.36. You saw that, and I'll go to the daily. That's, we might have been able to, with the dollar strength this morning, been able to go on and blow past that or, hit some stops. But the real resistance is going to come in at 33.36. And the bulls need a daily close above 33.36 to generate a new leg up. You can see that. That would close, that would take out this high, most recent high, which is a closing basis. I'm worried about the actual high. We're looking at the close. I always say it's the wicks that I like to look at for my support and resistance, because that's where you see where the most of the volume comes in. So if we can get a daily close above 33.36, even though, like I said, on a short-term basis 33.07 has been capping this market, but this is the real resistance. We could easily trigger some stops, but it's 33.36 was where the rubber meets the road. Looking at the dollar yen, we did see the dollar yen going and pair back. Our bias chart, our support that we had for today was actually lower here at 712, and the reason we put it here at 712, yeah, right here at 712, we actually have, you look on here, we had, or we look on the daily, I think we were showing here some support here coming in at 736, but my concern was the SPOOs, they're open to move lower potentially, and we don't want to be stuck in a situation like that. So right here, you can see the 712, but we actually had some support come in at 736, and but I didn't want to go in and push it for that level because my thoughts were I didn't want to have anyone caught with their pants down, so to speak, thinking, well, I thought 736 was going to hold, and boom, you know, we go on and slide further. But we kind of found some support around that area here. But potentially, if these equities slide further, we could easily be down here at the 709, 712, and that's what we've got to keep our eyes and peepers on. Looking at the peso, the peso has managed to try and actually defended the 61%, which came in at 1932. And we have actually, I mentioned today earlier in the chat room, hey, look, the market is defending the dips here, but for this to actually garner any momentum to the upside, we need to get a move above 1950. Now, the resistance for today, the bias chart resistance, is 1956, because that will actually start to push us or get beyond that. But look, if we can't even take out 1950, then that makes it a little bit tough, although the market is for right now defending these, purchasing these dips, but certainly nothing to go and write home about. You can see that right there. And we really, for bulls, really need a daily close above this 1960 to get things plucking along. Now, talk about plucking along. Let's go and take a look here at the cash dollar index. And we actually had our bias chart resistance today for 98.80. I think we were just about there when we were actually doing this bias chart, and or just right there at the time, I think it was. But we had this 98.80. I think we plucked this off of the daily. Take a look here. Bear with me one moment. Yes, you can see these little tips here. So that's how we came up right there. And we actually just gave it a little bit of extra room. So we put it at 98.80. And we'll see what happens. I mean, this thing is still moving higher. And the problem is that with the euro comprises 56.4% of the cash dollar index. So the way the euro goes is the way the dollar index goes. Now, we might be kind of trapped around here, as I mentioned earlier, is there's actually from my understanding, it was from last week, there's actually a $5 billion option expiring on Thursday. So, those that may have found themselves under some trouble as we have slid and gone below 110. One of the reasons I thought this 965 area would hold, because I thought, hey, look, they're going to try and defend this and push this back. And if they can keep this market elevated and you get some shorts to cover, then maybe by the time that Thursday rolls around, maybe we can be pushing up a little bit higher and above 110. You have to figure if you're stuck with a in totality, that is $5 billion option at the 110 strike, you get below that thing, holy smokes, man. So what happens quite often will be is you'll see option players defend the level and try and get it. So it's, once again, they defended this 966. It turns out to be a good level. You can see the touches. I always go with the touches. I think Amanda had a 78% level, 78% Fibonacci on the way back, but I was just going by with the levels here. But it's a good area for them to come in and try and defend it. So once again, on any dips back, I would think they'll try and defend it, and then you probably get a few more shorts to cover before you know it, we're above 110, and then those people can actually claim their premium without getting whacked if the thing starts sliding down. If it does, by the time Thursday goes, boy, we could really probably see some real good pressure come onto this pair. But my thinking is we may try and work ourselves a little bit higher from here. We shall see. Only time will tell. It's certainly early. It's only Monday. We are coming up in here in the Kiwi. Speaking of which, because we're the RBA tomorrow. So here's that big level here, and we were actually tagging it at the time on Friday, which is a 62.55. I noted on here. Kiwi finished the week at the support level, 62.55, while closing negative 7 out of the last 8 sessions. Bears are looking at 62 with a break lower targeting 60.72. Bears will reload on a test of 63.89. You can see that big old 63.89. The thought is that potentially the RBNZ is going to hold rates after that surprise big cut the last time. If that's the case, then potentially we could see the Kiwi get a nice bounce back. Time will tell. Let's go and move back over here. We'll go and take a look at the cross rates and why that's so important when we're looking here with, bear with me. I think Blake pointed this one out earlier, or actually in Face webinar. Look at this Euro Kiwi. It's had one heck of a drive. Actually, you can see here we've pulled back right here to the 23% extension here. I think that was where we actually had our bias chart support. Bear with me one moment. Yeah, there you go, 74.71. The bias chart support that we're looking for here on the Kiwi. Potentially, man, we may end up seeing this thing come down. Obviously, you can see the market's a little bit tired up in here. But like I said, we do that bias chart every day. We start the webinar at 3 a.m. Eastern, which is 4 a.m. Eastern time, 3 a.m. Central Standard Time, 4 a.m. Eastern. And if you're not available, Stelios records it, makes it available in the chat room about an hour and a half before the New York Open. So it gives you the opportunity to take a look at some of the levels that we're looking at from a scalper, very short-term perspective. Even if you're not a short-term trader, some of the traders will use it to confluence with their own analysis. Maybe, like I said, if they've been short, maybe they're going to cover a little bit as they come into, in this case, this bias chart support right here. And which is a good time at the, right now we're running the promotional offer with ForexAnalytix, and you'll be able to buy 1 month, get the next one free, also get a percentage off, if you go with the 6 month or actually an annual subscription. But I would certainly go on and try that 1 month, buy 1 month, get 1 month free. You can't beat that. And give you the opportunity to go on and not only take advantage of the different analysis, which is basic, technical, macro, Elliott wave, harmonics, but also be with us in the chat room. And but you can see here we have seen the Aussie continue to be under some pressure when it comes against the yen. The yen has been strong against all the other pairs, but we have come into a little bit of support in here as we tag down to this line right in here. Obviously, the yen pair is stronger with the weakness that we saw in equities. Now, equities have gone and come back. Look on here, the Aussie yen. Let's see, we're looking for 72.28. So a little bit lower that we can still move here with the Aussie yen. Taking a look here with the guppy. The guppy had a real nice fine run. We've actually gone and paired back, and you can see here. But a fabulous run that we had here with the guppy. I mean, a very, very strong run. You can go and take a look at this on the daily, probably get a little bit better idea with the guppy. A moment. So you can see here the market was acting a little bit tired. You had like a little bit of a spinning top. Maybe the wick might be just a hair long for a spinning top, with a hanging man. And we saw this follow through. The guppy is positive, headed to 136 after a strong 2-week run. The challenge at 35.17, which is the 38%. Support comes in at 33.29, with the bulls looking to reload at 32.26. Let's see for today. I mean, I think we stuck with that too. The guppy at 33.29, and today's low so far has been 33.35 or 33.36. But moving on to some of the other markets, we can go in and take a look at. Let's go and take a look here. We had a nice run up here in the crude oil, and I was looking for a run up here, kind of frustrating because I was doing some stuff with gold and actually just missed this. I was looking to run back up to this level here, 58.60, and I noted here 58.67 was going to be the 61%. But we made this run up here, and I put a little trash can down here because this is basically what I'm thinking here was the market is flushed out. Didn't have a little toilet emoji, but where the market kind of flushes itself out. So it kind of hang around this 58 area here. We dipped below it, though. We saw a nice little flush out, and the market could work higher. And I thought the area, the market, because if you think about it, equities are lower. There was also a report in the European session that Saudi is saying within, I think, by the next week or two, they can be back online with everything. Whether that's true or not, the market trades on what those headlines are. So I thought, okay, ultimately this thing's probably going to be bearish, but we'd already taken a dip. Now we took this strong dip at the time when we were dipping earlier was on the backdrop of these European PMIs that were just absolutely abysmal. I mean, you can see here, we were kind of hanging around here and the market had just kind of turned around and just tumbled lower as we came into these European PMIs. Look at that, just like, and then we took a little bit of a rally, took another dip here. So I thought the market was pretty well sold out here. We took one more dip, thinking, okay, it's flushed out. We could make this run up here. And I thought that was a very good area because you can see the different touches coming across the book. And I know a lot of futures traders use volume analysis. But, you know, if you look at the touches coming across these wicks or, you know, then that's where you're going to see where you're going to expect to see a lot of the volume. You can see where the market turned around and rotated lower. I caught a little bit, but not even much of anything to write home about. But we did go and see that nice, you know, pullback. Speaking of gold, though, let's go and take a look here with gold. So we saw a nice little rebound up in here where we took Friday's range and actually ran out of gas at the 161%, but the market made one more dip here. Before the market had gone and pulled back, and we had actually, I think it's 20, I think it was 24, whatever, it was 161%. We came back, but with the weakness in equities, we made another run back up in here. Bear with me one moment. So you look on here, the market made that run right to the 161% here. And then we paired back, but then we reassert ourselves as equities began to weaken. So the gold market is keeping a pretty close eye on equities. Now I did go on and grab some money going up, and I tried to set myself up for a shorting opportunity. I did, but I didn't stick around too long because I tell you what, this gold is holding up like nobody's business. I would have thought after reaching that area and, you know, may have, you know, stopped out some people that we could rotate lower, but with these concerns with the equity weakness, we are really, you know, keeping a nice firm bid. And potentially now the futures, December futures are trading at about a $7 premium to this. So I was looking for potentially this can get up to 15.29 initially. Okay, now where we have resistance here, and I'm looking at the S&Ps. The December futures are trading at about a 2.25, 2.5 premium to that. So I'm looking at 29.97 right here on the S&Ps here. And basically, I just use the trading view charts, and then I just apply it to the future. So if I'm looking right here, this is going to come in at 29.97 and 3/4. So I'm looking to get short at 29.99, maybe 29.99.5, 99.25. You know, we're a bit sold out, but I think that if you're going to hold it for a longer haul, this is probably not a bad area. You can see here that we actually worked to open up a little bit higher as we came into the, you know, for the Asian session. The reason we took that big dip on the news about China canceling the Montana visit and all that, and then we saw the equities pop up real quick. There was some clarification whether it's true or not. They said, no, they didn't cancel. It's the U.S. that requested they cancel it. Well, you know what? If you can believe that, I've got a bridge to sell you. But anyway, that being said, the market reacted to it, and you can see the importance of that 3004 level right here. So the market ran out of gas, and from there, one more dip here. And then, of course, you know, you're thinking, what the heck happened? Well, what the heck happened was the PMIs, these European PMIs. Hang on one moment. Okay, let me pull this back. And these European PMIs just really sunk the market. As they say here in Texas, fell like a turd in a well. I mean, look at that thing, man. Once you hit, look at that. You're coming into these European PMIs, and you can see here that, bear with me. There we go. And you can see here, you know, you get the French PMIs, then the German PMIs, and the last of it was the whatchamacall was the Eurozone PMIs. So you can already see that this market was already starting to slide. And then once we got into these PMIs, and the German PMIs just sent this market really going lower because there's a concern for recession. The German PMIs were some of the worst that we've seen since 2009. So that really sent the S&Ps lower. So that's been my concern here, is being a little bit careful. I thought that there'd be a nice little scalp short in gold market, thinking, wow, this gold market has found these equities pretty close. But any move back up to this 29.97 area, I think, is going to be, which equates in the futures to about 29.99, 29.99 and a half, is going to offer an opportunity here to probably go and get short. Because my concern is, if you look at the equities from a longer perspective, let's go and switch into that screen. See, look at this. Man, this market looks tired. Look at that. A gravestone doji, two back-to-back gravestone dojis. Then a little bit of a hanging man. Then we get another hanging man. Wicks aren't too long. Then you get almost what you'd consider like a spinning top, meaning that the market's losing momentum here, and the market looks to pare back. The point being is that we've come a pretty long ways, and a lot of people are still thinking, okay, we're going to go to new highs. We're going to go to new highs. And to me, I think the market is susceptible to a pullback. Henceforth, you got to watch it with these yen pairs. But to me, key level I'm looking at 29.75, and then below that 29.65, which would be the 23% correction. I think we can still, as we roll into the end of September, first part of October, certainly susceptible to a pullback. And we know that the market, when it looks at we call it, seasonally looking at the market, is that we generally see weakness going into the latter part of September, first part of October. Sometimes you see a low within the first week of October. Sometimes it's a little bit later. But that's going to be the concern here. And so when you throw on these European PMIs, you keep hearing this word recession. Oh, there's not going to be any recession. Look, when you see these German PMIs, the worst, and that's the engine of the Eurozone, the worst since 2009, then who the heck's going to hold this thing up? Now, the US is doing good overall. But once again, like I said, if everybody's going to be, in bed, all these other countries with a, thermometer sticking out of their mouth, and some of them on life support, it almost seems like, well, then that's really going to be difficult going forward. And the market, which is going to be anticipating or looking forward as to what potentially happened, what can happen, well, then that opens the door for things to be a little bit weaker. And you're looking here, it's not, we're almost in the nosebleed seats. I mean, let's see, you look at things in a perspective. Look at that. So do you think we could go and pull down here maybe to 29 even, 20? Yeah. So that's what I'm saying. So got to be a little bit careful there. And why I thought gold looked like a decent little quick scalp short, but decided, you know what? I took a little bit out and I said, I better get the heck out of Dodge. This thing is holding up too well, and we get a little bit of a sell-off here. We're going to jump up, lickety split here on gold. Anyway, that's all I've got here. Thanks for joining us here on the Daily Roundup. And once again, now's the time to go and take advantage of the promotional offer with ForexAnalytix. Buy 1 month, get the next one free. You also get a 25% discount if you get a 6-month subscription, and I believe it's 35% if you get an annual one. But thanks for joining us here, and good luck trading on the rest of the day.